Let's connect with Hemang Jani, who's joining in on the show. Hi, Hemang. Morning. It's been a steady move for the banks, and we've tracked the technicals, spoken about whether or not a breakout is in store for some of the large cap private sector banks. But what's the sense that you're getting? Those who have been patiently waiting for the banks to actually perform, is there more to go by way of a rally?
Yeah, good morning, Avan, and thanks for having me. Yes, I do think that banking as a sector has outperformed even through this, correction phase of October and November. If you see, Bank Nifty outperformed Nifty, and now looking at two aspects. One is the numbers, that were delivered. I think by and large the numbers were in line, and overall, we are looking at a very significant growth with a good amount of asset quality. So that surely makes a case for banking stocks. Also, we have RBI policy meet tomorrow, and there is a probability of a CRR cut, which again would be good news for banks. And thirdly, from a derivative perspective, when you look at the Bank Nifty open interest, that is at a very low level. So I do think that there is some more juice, when it comes to Bank Nifty, and particularly some of the PSU banks, some of the heavyweight private banks, HDFC Bank, ICICI, and SBI, BOB, Union. I think there is a case for a 5 to 10% kind of an up move from short to medium term.
Okay, interesting. Hemang, hi, morning. Where else are you finding value in the market right now?
So Aisha, I think our market typically, given the corrective phase that we've seen, would be more focused on to the growth stories. Because you may see a little bit of bounce here and there, but growth is where there is going to be a larger move, larger opportunity. And from that perspective, I think some of the defense names like Bharat Electronics, HAL. They look quite interesting because of the kind of growth and incremental orders that are flowing through. So that is something that we surely would, want to get into. CDMO has been a space which has been doing pretty well. So Laurus Labs, DVs, I think these are the names that we find that, there are enough growth triggers ahead. Though they haven't really corrected much, but we do think that there is a case for some sort of an investment there. And of course, the platform companies are the big theme, and we all have seen how Zomato, Swiggy, even the newly listed one, that Black Park, I think these are the pockets which will continue to invite investor attention. And we do think that though they are a bit stretched, but as a theme, I think people still want to own it.
Quite interesting. Hemang, just reiterate your strategy. I mean, Zomato, of course, we all know that's pretty much a consensus trade. But why Swiggy?
So, Aisha, I think, see, within the overall market, whether you look at IT or otherwise, there are very few pockets where you can be very confident of, next, let's say, 3, 4 quarters of growth. So, quick commerce is one area where you're looking at a 25, 30% growth. More so, in case of Swiggy, it is quoting at a significant discount to Zomato. So I think, though the stock has done very well post listing, I think as a theme and the attractive valuation, that makes it far more, attractive case at this point.
I'm Hemang, curious to get in your take as to what the outlook is on the auto sales numbers that have gone by. Is that indicative of a bit of a slowdown? Do you believe that it was a one-off and that we will see momentum actually picking up? And how are you positioning yourself within auto?
It has done very well over the last 2.5 years. And when you look at the monthly numbers, they are not that encouraging. For a period, we had, two-wheelers doing much better compared to CV or passenger vehicles. But on an overall basis, we think that the growth is going to be slightly muted. You also had a news that Bajaj Auto has taken a price cut of almost about 4% on their newly launched bike, which again is not that positive news for the sector. So I do think that one needs to be a little cautious. I think within auto, Mahindra is one stock which stands out because the kind of performance that it had, both tractors as well as the overall automotive sales. The newly launched EVs, I think, will create enough excitement. So I think this is one stock which we like, but overall our view on the sector is a bit cautious.
You've got Goldman Sachs, which has come out with its latest note on consumer durables. They're saying that in FY26, they expect real estate driven demand for electricals and durables only to accelerate. There's going to be increased domestic manufacturing in various categories. The premiumization trend is going to continue. And therefore, they're talking about how the risk reward is looking attractive for the likes of Crompton, Havells, etc., and the entire consumer durable space. Hemang, where do you stand and what's looking promising here?
I do think that given the momentum and the incremental positive news on the sales front, the real estate stocks are actually doing extremely well. And on the back of that, some of the ancillary companies made plywood, tiles, some of the consumer products or lighting products would remain, in action. So I do think that Crompton Consumer be one stock that one can really watch out for, because we do think that the overall growth over there has been quite good, both on the lighting and the other product side, with a very stable margin. And also Century Ply, I think, should reasonably do well, given the kind of momentum that we are seeing on the fresh sales by the real estate companies.
Okay, meantime, OMCs as well in the spotlight. Of course, we will get a little bit more clarity as to what happens in the OPEC plus meet. But the general sense is that we can see higher OMC profitability in the second half. And Hemang, that's going to offset the LPG subsidy impact for the year. Where is it that you stand when it comes to some of the OMCs or even oil related stocks?
So I think within the entire oil and gas space, I think GAIL would be one stock that we would be positive on, primarily because it delivered much better set of numbers, and also the possibility of the gas being introduced onto the GST framework. So I think that would be one name which we definitely have a positive view on. Oil marketing companies, at one point they did well, but in the current scenario, given the way things are, not too excited, but yes, I do find value in names like BPCL, IOC, etc. But typically it takes a bit of a time, and there is a lot of grind before they really break out big time. So would not be too excited over there.
Okay. 3% of equity trade has already taken place in Indus Tower, and that in a sense could be an interesting one going forward. In this case, Vodafone has sold its stake. Cash comes to Vodafone. The beneficiary here could really be Vodafone, but the debt is so high in their balance sheet that nothing like a drop in the ocean, so to speak. Bharat Forge QIP, and they're raising capital at a time when this entire build in America, made for America theme is coming back. And why would Bharat Forge benefit because of that? Well, they've got manufacturing in America, especially for Class 8 trucks. Do you track Bharat Forge, Hemang? First it was a play on CV, then it was a play on defense, now it's a play on America.
Yeah, we do track Bharat Forge, and we think that overall the company has done very well despite the challenges that it had on the Class 8 truck front. Uh, the growth is coming back over there, which is their core business. On the defense side, there is a meaningful progress. And the fundraise, the demand is extremely good. I think the book is already up almost about 3 to 4x. So I do like Bharat Forge, not as a core, the forging company, but more as a defense play and the other businesses that they are building. And we do think that this will offer a good, 18-20% kind of an upside over the next 12 months.
It's been nothing short of a roller coaster ride for some of these Adani group of stocks of late. What's your assessment?
So we keep getting the negative news flow around the group every 3 or 6 months. So that makes people a bit uncomfortable. But purely from a business perspective, I think Adani Port is something that is actually doing well at the ground level, both in terms of the market share gain, the volume growth, the kind of capacity addition that they've brought in is quite commendable. So we do like that stock. The only thing is that it's a high beta group. You will keep hearing all the news flow around it. So if you have the stomach to deal with that kind of volatility, then surely this one we like at this point.
Thank you, Hemang, for joining in and sharing with us your thoughts on the markets. Let's keep.
If you like this video, then like, share and subscribe to ET Now.